Good evening, ladies and gentlemen, and welcome to Gonyani Precast Investor Webinar. So we are here to hear the good story of Gonyani Precast. With me, I have the chairman of Gonyani Precast, Mr. Franz Pinar. Then on the far right, we have Gonyani's managing director, Miss yes, Miss Marisa Gunene. So welcome everyone, and thank you for joining. Thank you so much for offering us your valuable time. So what's going to happen now is we are just going to hear, but before we begin, I would just like to mention that Ngonyani Precast is offering an opportunity for an investment for the Swazis to be able to invest in form of shares. So this will be an initial public offering, which is IPO, which has not occurred in the country in the past 5 years. So this is a lifetime opportunity, which we do not know if you will have another chance. But I'm not here to market. Ngonyeni will speak on their own. But before I hand over to the chairman, I would just like to introduce him briefly. I'll have to read here so that I don't make any mistakes. So, Mr. Franz Pinar, the chairman of the NPC Limited Board of Directors, with a strong connection to Eswatini since 2004. So he made this vibrant nation his permanent home and proudly acquired citizenship in 2013. So Franz brings over 3 decades of invaluable expertise in the construction and building industry to the table. He's deeply rooted in Gonyen region of Eswatini, where he resides and thrives. So during his remarkable journey with Inyatsi, Franz played a pivotal role in transforming the company from a modest 100 million enterprise to a multinational powerhouse operating across sub-Saharan South Africa with a workforce of 3,500 employees and an annual revenue exceeding 1.7 billion. So Franz is renowned for his visionary leadership style, leadership by a commitment to inspiring positive change and propelling organizational development through forward thinking and strategic decision making. So with regards to his educational background, he holds a Bachelor of Science in Civil Engineering from Stellenbosch University. So Franz is not only a registered professional engineer with the Engineering Council of South Africa since 1993, but he also has been a member of the South African Institution of Engineering since 2003. So his community involvement, beyond his role at NPC, Franz actively contributes to several local boards in Eswatini, including the Look Commission, Eswatini Airways, Partners in Action, USA, and Ngonyani Homeowners Association. Additionally, he serves as an advisor to Challenge Ministries Eswatini. So Franz Pinar is not just a leader, he's a catalyst for progress, committed to driving growth, innovation, and sustainable development for the benefit of all stakeholders. Yes, that's all from me. Then you can hear more from him.
Thank you, Ntando. Very kind words indeed. Since I left Inyatsi in 2016, we've been able to see another miracle happening. And, I just want to introduce you to the rest of our board members that currently serve on our board. First is Nelsiwe Matabela. Nelly has been a long time friend and colleague, but is highly qualified in quantity surveying. She's got a master's degree from the University of Cape Town in property studies. Nelly is the managing director of her own consultancy, Asakiwe Developers and Project Managers. She has a vast experience in the property development space. Previously was managing director of Inyatsi Properties. She also worked at the King's Office for a few years and currently serves on several boards that shows her expertise and recognition in the industry. She's, among others, on the board of Tabio Properties, Swazi Plaza Properties, and many more. Also a servant of the industry, well-known and really a strong professional. We are very proud to have her on our board as a non-executive independent director. Next is Portia Dlamini, also independent non-executive director. Portia holds Masters in Business Leadership from UNISA, as well as several professional accounting qualifications. She has vast experience in financial accounting and financial management. She was a CFO at Inyatsi before. She heads up her own consultancy and also owns a restaurant, which I think is not always fun, but she seems to enjoy that. Portia brings stability and financial expertise, and she also chairs our finance audit and risk committee of the board. One thing about Portia, in 2012, she won Businesswoman of the Year in Eswatini. Really very well qualified, well experienced, and a very stable influence on the board, professional and real quality. Next board member is Daniel Simelani, also independent non-executive director. Dan used to be CEO and a director of African Rainbow Minerals Exploration and Copper Division for many years. Dan is a lawyer by profession, but holds postgraduate, international postgraduate qualifications in mining law and mining licensing law. Well experienced, has worked all over the world, and really decided to, at the peak of his career, decided to come back home and move down to Nkonyeni and lives there now. And it's really an honor for us to have somebody of his stature and experience on our board, and he brings a lot of stability and a wealth of experience. Dan also chairs our board selection and appointment committee and membership affairs on the board. Next on our board is the only executive director on the board, is Marissa van Zuidam Kunene. Marissa is our managing director, also has a wealth of experience, has qualifications, BCom and BCom honors in business management, has a resilience and the ability to get stuff done. And in a difficult time, when the whole economy was struggling, especially after COVID and after the political unrest, the whole economy was really tight. And if your clients doesn't have money, you struggle to get money out of anybody. And it made the whole industry extremely, extremely tight. And in difficult times, you can go and sit and cry in a corner, or you can come up with a plan to address the situation. And Marissa and her team, last year and at the end of last year, decided to really go and assess the business in the different divisions and to see if they could raise enough capital, what are the opportunities that could arise, and what can the business do. And each division came up with really exciting opportunities for us. And that's really the story that we want to tell you. And I'll hand over to Marissa just now. This is the journey that Marissa and the team will take NPC on to grow beyond what anybody could expect. And it is an exciting journey, and it's created a really exciting opportunity for all of us. And that's why is to hear this story. So I'll hand over to Marissa, and she can take us through a presentation. Thank you very much, Marissa.
Thank you, Frans. Good evening, everyone. My name is Marissa van Zuidam Kunene. and I will be taking you through our presentation as to why we are here today. So as Frans mentioned, NPC was founded in 2007. We currently have 6 divisions under the group. We have 180 employees, of which 42% are female. We are SWASA certified, and we are CIC and BMSA registered. So the divisions, we currently have NPC. That's what started in 2007. That's the manufacturing company. We manufacture blocks, bricks, pavers, and retaining blocks. In 2017, we acquired a hardware store that joined the group. This is Hardware Solutions. We sell general hardware, and building material to the market. In 2018, Swazi Tiles, the only concrete roof tile manufacturing company, joined the group, and we are SWASA certified. 2017, Construction Solutions, our construction division, joined the group. We have experience in the construction of houses, renovation of existing buildings, and building of retailing shopping centers. In 2017, Printing Solutions joined the group. This is our printing, branding, and marketing company. We currently supply various companies, external companies in the market, with various marketing and promotional material and services. In 2018, we expanded into South Africa, and a distribution hub, Mixowiz is our distribution hub into the rest of Africa. We currently we have supplied as far as Zambia through Mixowiz. And then in the midst of COVID 2020, we started a business called Chemical Solutions. They're suppliers of water treatment, chemicals, equipment, and services. So this is the current company organogram. This is what the current organogram looks like. As Frans mentioned and touched on our board of directors, we currently have 5 directors, of which 4 are non-executive independent directors. Our directors were appointed in 2019 as part of our turnaround strategy. Our board comes with a combined experience of more than 110 years in the construction, mining, and built environment, and each board member brings a unique set of skills to benefit the business. So this is our executive team, also appointed in 2019 as part of the turnaround strategy. And the team comes with more than 100 years experience in the various sectors that they will operate in. So you have myself, Pilile Mawelela, who's head of shared services, Musagnene, technical manager, chemical solutions, Cleos Tole, hardware solutions manager, Nondumiso Mdluli, finance manager group, Iokobus Pinar, NPC operations manager, Gladys Lamini, alternate director, sales and logistics, and Hannah Pinar, group systems administrator. As mentioned, in 2019, we went through a turnaround strategy. And basically, these are 3 years financials that show you the change within the group. What you get from this is the increase in assets, an increase in retained profits, and a decrease in liabilities. Our historical growth, so NPC grew from 4.2 million in 2007 to 55.5 million in 2022. That's an average compounded growth of 27%. This is the economic snapshot of the country. From all these numbers, what we would like to highlight is the population growth of the country of 1.04%, which is 12,480 people are born every year. The urbanization rate of 1.9%, which is 22,800 people move to urban areas, which would equate to a minimum of 4,000 new homes or flats or housing that would be required for this. I think last week sometime we saw an article in Inside Biz where Mbabane municipality mentioned that there's currently an increase in the number of projects that Mbabane is registering, building projects, and there is also not enough housing in the area to house the communities. So this is basically our industry analysis. We fall within the construction industry, and we are regulated by the CIC. So based on CIC numbers, projects that were registered as at June 2023 were 670 million emalangeni. In September, the CIC also then awarded a contract to a company to establish and develop and implement the regulations and legislation of the industry, because they identified a gap with regards to the implementation of this. This further illustrates that there are projects that are not being registered with the CIC. The opportunity is great there. So our competition, we have broken down into 3 sectors, or everything I'll touch on going forward will be broken down into 3 sectors. I'll make reference to NPC and HS. HS would be the retail store, and Chemsol would be the water treatment company. So based on NPC, competition would be Brickon, Yang Group, and the smaller roadside block yards. For HS, it would be Cash Built, Build It, Independent Local Hardwares, and Buy Cash. And for Chemsol, it would be Buckman, Improchem, Hydrospec, and Biogas. Those are all South African companies. Our market analysis over the years, to decrease our risk, we have diversified. And when we diversified, we now currently supply more than one product to more than one market and more than one client. So this is illustrated in the slide, or the where we have all the products. Those are products that we supply currently, and below that we have target market. Initially, we were only in the construction market or construction industry. We have broadened or diversified out of that. And the differentiators, what makes us different from our competitors, is the quality we supply, the fact that we are solution driven, and the fact that we are customer centric. The market analysis, as mentioned earlier, I'll touch on it in 3 forms. So our sales contribution, our sales mostly come from individual clients for NPC, and then corporate clients at 32%, the retail industry at 18%, and construction at 12%. Chemical solutions, 60% of our sales come from sugar, food, and beverage, and 40% come from forestry, pulp, and paper. HS, 63% come from your corporate private clients, and 37% come from individual walk-in market. So our model with HS is we are currently registered on various databases, and we supply mostly corporate, and we'll get into that a bit later. So we are currently the biggest manufacturer of concrete precast products in terms of capacity and in terms of revenue in the country. So how do we grow? We grow by listing of equity and debt bonds on the Eswatini Stock Exchange to raise capital of between 150 million to 250 million, which will be reinvested into the business to grow and unlock value. This will take the business from a 55.5 million revenue in 2022 to 144 million revenue by end of year 5. This is an average compounded growth of 21.23%. And we will increase employment by 25 to 30%. We will further increase informal employment opportunities by 1,600. This is basically our current footprint. We are based in Ngonyeni in Strogodvo. We currently supply 32 retail stores and 6 resellers. If we can move on to the next slide. The next slide basically shows the potential for our growth. The growth basically is based on our location. There are projects within this location that have been approved. There's the Strogodvo Industrial Park, the railway project, Eswatini railway houses. Then there's government approved projects, which is the Strogodvo police station, clinic, and police accommodation. We are ideally located in this area, less than 5 kilometers away from this, where these projects will be undertaken. So we are competitively located. There's further the Mpageni Dam and the Eswatini Services water pipeline. The pipeline runs to the community. We had no water services water in the community historically. The pipeline is a project that is coming on now. The Mpageni Dam, we do understand that they will require products initially to set up, and that's what we are targeting. Besides that, we will then increase our market or our retailers from 32 to 67 by adding 35 retail stores that we will supply. So we will supply an additional 35 retail stores within Eswatini, and we will supply 22 retail stores within a 200-kilometer radius from us in South Africa. Use of proceeds. I will touch on the proceeds or the listing of equity, the proceeds on the right, because that's what brings us here today, the listing of equity. So 9.7 million will go into, let me start with, we are listing 50 million emalangeni, 50 million shares at 1 lilangeni a share, which is 50 million emalangeni. Of that, 9.7 million will go to Ngonyeni Precast to increase revenue by touching on increasing our stock, having a shelter over our yard, introducing electric forklifts, and then additional working capital. Hardware Solutions will also get 9.7 million, of which 5 million will increase their stock, 3 million will be for a roof over the yard and paving, and 1.7 million will be for a truck and forklift. For the additional revenue that we are planning, we will require additional equipment for them. Then there's transactional fees. We will be settling our short and medium-term debt. To reduce our interest. We will also have transactional fees, working capital, and employee retention under this. Then under ChemSol, it'll be 1.7 million. We will implement and introduce a blending plant, and all costs associated with that will be the establishment of the plant and availability of chemicals, the starting up of the plant. Then there's Swazi Tiles investment, our roof tile plant. We will upgrade our plant and we'll have additional working capital. So I will touch on each business unit now. So NPC, we're planning to increase our stock by 5 million. This will increase our annual revenue by 12 million. We will do this through a consignment stock model, which we have tested. In a 6-month period in Eswatini, through using one of the retail stores in Eswatini, the specific retail store contributed 1.1 million to our revenue through the consignment stock model. As mentioned earlier, we will increase our retail outlets from 32 to 67 in Eswatini, and we will add an additional 22 retail outlets in South Africa. Because stocks sell stock and we will have availability on the floor, we will no longer turn clients back and we will increase our walk-ins clients. Hardware Solutions, we will increase our stock by 5 million. As mentioned earlier, 60% of our clients are corporate clients. We supply major players. And by increasing the stock availability, we then do not turn away work. By doing this, our revenue will go up to 24 million an annum. We currently have a monthly average revenue of 1.3 million. We did a test as to, in the last 4 months of the financial year, as to how many projects we lost within that 4-month period as a result of stock unavailability. And this came up to 4.5 million emalangeni in those 4 months that we had tracked. We will further increase our walk-in clients by 20% because we will then have stock on the floor, as mentioned earlier, stock sells stock. We will then have the advantage of competitive pricing because we will then have cash flow to be selective as to where we get our stock from. Swazi Tiles investments. Swazi Tiles, we are planning to also roll out the consignment stock model. Currently, Swazi Tiles is a cash upfront business, cash only business, and by rolling out the consignment stock model, we will increase our revenue by 1.2 million emalangeni an annum. The consignment stock will be rolled out to key NPC retail clients. As mentioned earlier, Swazi Tiles is the only concrete roof tile manufacturer in Eswatini, and we are SWASA certified. We will then also increase our walk-in clients because of stock availability. Currently, there's a waiting list of about 5 to 7 days to get your product because we will have the cash flow and also improve the plant to increase capacity. This will then ensure that we are constantly, or we have stock availability for this. Chemical Solutions, by the implementation or introduction of a blending plant, we will increase our revenue by 1 million, and we will further increase our GP by 20%. We will increase our product offering. We currently supply forestry, sugar, food and beverage. We will increase our product offering to the mining and agriculture industries. Chemical Solutions also has agency agreements with 2 suppliers in South Africa, water and sanitation treatment companies. And we also have agency agreements to tender for work up to 10 million with their support. We are currently handing over a 3 million emalangeni project to one of our clients that they have secured in the month of October. Sand mining. We currently mine our own sand for our own use. We have mining licenses for 2 sites within the area. And we have a 10-year lease valued at 45 million emalangeni. By offering or mining sand on a commercial basis, we will increase or add 4.8 million per annum to our revenue. The estimated demand is currently 4,000 tons of sand, and this is through our current clients that constantly ask us to sell sand to them. So the demand is there. Further, we have not accommodated or taken into account the transport revenue. So the transport we have accommodated or taken into account in our budget. We haven't taken it into account, but based on the 4,000 tons that we have a demand for, that's an additional 200,000 per month, which is 2.4 million per annum. We are in the process of acquiring a strategic raw material source. This is an existing company that has a current revenue of plus minus 2 million emalangeni. We will increase this to 7 million in year one. Firstly, through the fact that NPC currently uses that as a raw material, but we do not acquire all of it from this raw material source. Secondly, we have the advantage of the fact that it is within the demands of material that our current corporate and walk-in private clients require. 60% of our walk-in and existing clients have requested that we sell the specific raw material source to them. And our retail store, hardware store, also has the demand for this product. A consignment stock model will be used strictly through HS and NPC, so stock will be kept on those two floors and it'll be sold to our clients. This raw material source has a capacity of 4.4 million emalangeni per month in terms of revenue, but at a 25% capacity, this is 1.1 million revenue per month. There's also additional transport revenue for this of over 3.2 million based on a 25% capacity. We have the concrete batch plant. It only makes sense that once we have the raw material source and the sand that we will be supplying, that we venture out into concrete batch plant. In year one, we will add 2.4 million to our annual revenue. The target or the intended strategy for this is to supply the south of Eswatini, with the nearest competition being 25 kilometers away from Ngonyeni in Matapa. We already have the transport advantage with that. And then further with our own raw material supply, we will have a further advantage of 100 emalangeni per ton just on the raw material, which makes us 640 emalangeni per cubic meter cheaper to supply this area. New industry technology. Through improved energy operations and fuel efficiency, we will improve energy operations and fuel efficiencies through new technology. We will add new horse trailers, trucks, plant and equipment. By doing this, we will save 9 emalangeni 86 cents per kilometer through this new technology. We will further save 2 emalangeni 20 cents through the new technology efficiencies on fuel per kilometer. We will add electric forklifts. By adding electric forklifts, we reduce our costs by 35%. We will add a shelter over the Ngonyeni precast production yard. This will result in an increase in production and a reduction of lost time. We will also add a yard over HS's, a shelter over HS's yard. This will then reduce our stock losses as a result of weather. We will install solar at Ngonyeni Precast and HS to reduce our costs. The blending plant that Chemical Solutions will install will also reduce our costs in terms of fuel and transport. The plant upgrade in Swazi Tiles will reduce our cost of sale. So we will have a new increased focus on environmental and social impact. Post-listing, this is what the company organogram will look like with the 3 additional business units to the right. While doing this, we then decided to take a conservative approach in terms of our revenue. Using conservative numbers and the conservative approach, we say within the end of year one, the potential is 90 million emalangeni in terms of our revenue. However, we have only budgeted for, or we have budgeted for a 75 million revenue in year one because we've already lost 3 to 4 months of the year without implementing all these changes. So we will then move the company from a 55.5 million revenue an annum to 75 million an annum just in year one. The next slide is our projected income. This shows that we moved the company from 75 million in year one to 136 million in year four. Our profit increases 156,000 in year one to 15 million in year four. Please note we've accommodated the finance costs for the bond of 80,400,000, which is 10.5 or 10,050,000 in all the years. This is our projected balance sheet. It must be noted that with the equity, the 50 million will be reinvested into the business. So you see it there under the share capital, so as capital. So you'll see that is all being reinvested into the business and the business then using those funds to unlock potential. We have then also created a sinking fund for bondholders. From year 5, we will have a sinking fund to ensure that by the end of maturity, bondholders have their money, or we have the bondholders' money to pay back. This is the valuation. So our evaluation, we were valued by an independent valuer using the income approach with the 5-year average projected income, taking into account growth and the risk associated with it. Through this, the independent valuer came up to 175 million as the value of the company. They used a capitalization rate of 13%, which takes into account our current revenue, our location, and our assets. It must be noted, though, that a higher capitalization rate could have been used based on the increase in the revenue and the increase in the assets, but because this whole model which we chose to utilize or use a conservative approach, we then stuck to the 13%. This gave us a PE ratio of 7.69. We then went onto the JSE and we looked at companies that are similar to what we do, and we put them there and we took their weighted average PE ratio, and that comes to 9.3. So we are still way below the weighted average of companies that are within the JSE that are similar. Not all of them do everything that we do. So the SDGs addressed by NPC. NPC currently, to achieve a better and more sustainable future, NPC addresses 11, technically 12, but 11 out of the 17 SDGs. So I will not go into detail into all of them. I will just touch that it's SDG 1, SDG 3, because the information is on the slides. SDG 3, good health and well-being. SDG 4, quality education. SDG 5, gender equality. SDG 6, clean water and sanitation. SDG 8, decent work and economic growth. SDG 9, industry, innovation and infrastructure. 10, reduced inequalities. 12, responsible consumption and production. 13, climate action. And 15, life on land. So it's important to note that from SDG number 9 to SDG number 15, through the implementation of this new technology, PVC plastic composite skid boards, we have increased our production and reduced the negative impact that we have on the environment. We have further reduced our use of wood because we use PVC composite boards instead of wooden boards. So we have saved 77,000 tons of wood by going into this historically, and we will further save 29,000 tons per year just by going for these PVC plastic boards. We also then reduce on our second grade. We have reduced our second grade product from an average of about 5%, which is the industry norm with where we are, to less than 0.1%. So that is basically the end of my presentation. Thank you. I'll hand over to Ndando for questions.
Thank you. Thank you so much, Marisa. Well, I always tell people it's quite an interesting story. Every time I hear it, and I've heard it quite a number of times as well. So thank you so much to NPC. You guys have been bothering me on the phones. So now you're not hearing it from me. So now you're hearing it from the horse's mouth, so they say. So yes, right now we will be in the question and answer session. So I can take questions on the chat box, and we can also take hands starting from now. So if anyone has a question, they can either type it or they will just raise their hand and we will give them the floor. Otherwise, in the meantime, okay. Okay, thank you. There's a message on the chat box confirming what I'm saying. So please, can you guys come up with those questions you've been asking me over the phone? The people are here now. Okay, but in the meantime, I can just highlight the fact that I'm impressed with regards to how the funds will be utilized in the business. You know, it's usually worrying sometimes when a shareholder is selling, because when someone is selling and they're taking the money and leaving, because it raises the question that this is your business. So if you are running away from it, why should we come in? So right now, what's happening is the money that will be raised from the selling of shares will then be reinvested back into the company. Okay, I can see the questions, just keep them coming. Yes, so now I'll just go to the first one, and it speaks about the form. That one I will just say email me or give me a call with regards to the form. The second one is the issue of the deadline. Okay, I'm going to take this one. So with regards to the deadline that is mentioned on the prospectus or that has been communicated has been the 12th of October, which is tomorrow. But we have applied for an extension that will mean that the new deadline will be the 20th. So the minute it is confirmed, we will notify you guys, but we are hoping that it will be. Remember, we are listing through the stock exchange, so approval has to be granted in stages and from various stakeholders. So the other one, what is the dividend ratio based on the shares you have bought? Let me allow the chairperson to answer that one.
Thank you, Ntando. I see there is more than one question on the dividend policy. So I'll just share what is included in the prospectus, but for clarity, it is the intention. Well, obviously, the policy states that the board will decide when dividends get paid and how dividends gets paid, and there are certain requirements that they need to comply with. They need to ensure that the company is making enough profit, that it actually has the cash and can afford to pay the dividend. But after all of that, our budget is really conservative. So even with all of that, we have decided not to pay a dividend in year 1 and 2 if things go according to plan. Obviously, if it goes much better, it'll be the board's discretion to decide otherwise. But at this stage, the current plan is not to pay a dividend in year 1 and 2, but from year 3 to 5 to pay a preferential dividend to the shareholders that now buy shares. And you will see if in the submissions and in the presentation, the slide with the balance sheet in it actually showed a dividend being paid for year 3, 4, and 5. And we have decided to, in year 3, 4, and 5, pay a preferential dividend to the shareholders that apply for shares now and buy these shares in the market. And we will pay a 10% return on those shares in year 3, 4, and 5. the balance of the shares, in other words, the shares that we retain, will only get a 5% return in year 3, 4, and 5, because we don't believe the company will be in a position to pay a 10% return on all the shares in year 3, 4, and 5. So we are prepared to forfeit half of the dividend that would have accrued to us in those years. So you'll get a 10% return in year 3, 4, and 5, and we will only get a 5% return at that stage. Obviously, if it goes better, then the board can declare a larger dividend. But this is what our projections currently show, and we are confident that we can achieve this. I hope that answers the questions. Thank you, Ntando.
Okay, let me see. The next question speaks about, I think, Sipho, you can get back to me if you're not answered, but I feel like your answers has been also accommodated here with regards to the dividend. Now, okay, this is also dividends. There's a question I'm missing. There's shares open. Okay. Navigel is asking the shares open to the public or institutions. Everyone is allowed to subscribe. What was the question, sir?
Something about risk. There's a question. I'm just trying to. What are the key risks that NPC believe they face in the medium to long term? So I do think that one must understand with COVID and the political unrest that we've been through, I think NPC has faced the worst possible risks it can ever face. And that is exactly where this turnaround strategy and then the new business plan with the fundraising has come from. But we see our 3 most significant risks. Political unrest is definitely an issue, because for a start, people can use your products to throw through other people's windows. And we really found that directly after the unrest, the retail market stopped carrying stock of our products, especially the foreign companies got instruction from South Africa not to carry stock, for many reasons, but the main concern was that it is something that can be used to damage something else. And it's interesting, we found that prior to COVID and the political unrest, more than 60% of NPC's gross sales were through the retail hardware market. Hardware stores sold 60% of the products that we sold. Today, that number is 18%. So a significant risk, and that is exactly why Marissa and the team has developed this consignment stock model. We will now disrupt this market, and we will place stock not only in the 32 stores where we are, but we will place it in 67 stores. We will place stock on the floor, and that client, the hardware store, will only have to pay for the stock once it gets sold. And this we believe will be a massive disruptor in the marketplace and will be a massive advantage to us. So we take that risk, but we manage it well. The second risk that we also experienced during COVID and during the time of unrest was raw material supply. Even though we buy the bulk of our cement locally in Eswatini, our local supplier buys the raw materials, everything from South Africa. And when COVID hit, the border was closed and the country ran out of cement. Similarly, during riots and when transport were problems, and even in South Africa, when you have transport strikes, it becomes a risk. So we see that as our second biggest risk, is to secure raw materials. And it's not only cement, it's also other raw materials. And that is one of the reasons why we have focused, really put a lot of effort into securing our raw material supply. And that's one of the reasons why we're pursuing to buy a company that supplies a lot of our raw materials. And then obviously the third biggest risk, once again, during COVID and the political unrest, that put us the most pressure on us, and that's cash flow. And all these things contribute towards it. But if you don't have cash, you don't have raw materials, and there's political unrest, then you can't sell your products. That to us is the perfect storm for big trouble for us. But we really believe that not only have we weathered an immense storm, the perfect storm really, we now have a plan in place to address this, and we will disrupt the market in a way where we will be much more protected in the market than our position would be in any case if any of these were to realize again.
Thank you, Frans. I see there's a question about, I see there are a lot of potential in the group's growth in terms of the new trucks. Will they be bought or outsourced or leased? We currently own all our trucks now, all our delivery vehicles we own. We will be buying new delivery vehicles to ensure that we are doing it, we will do it more efficiently. Obviously, with the growth, there will be opportunity to lease or outsource, because we will need to be able to maximize on that growth. But immediately, we will be adding new trucks to what we currently have, and we will probably see what we do with what we have. Then there's a question, are there any plans of doing business in Mozambique or any SADC countries? Yes, there are, but we've tried to stagger our growth or do it in a phased approach. So we have basically pitched what we will do almost in the short term, in a short-term period. So South Africa and Eswatini were the first phase of our growth plans. There is Mozambique and the rest of SADC that is there. This will be done through the Swazi entity and the South African distribution hub, Mixos, that we currently use to supply South Africa. I see there's what's the maximum shares I can buy? You are not limited. There are 50 million shares on the market. You can buy 50 million shares.
You can try.
You can buy 50 million shares. I'm hoping there's nothing I've missed. Let me just hand over to Ndando.
Okay, thank you so much. Okay, you guys, getting a message that says that people cannot raise their hand. If that's the case, then can you just type on the chat if you want to say something? Then we'll proceed. Otherwise, there is a question with regards to trucks. Have you covered that one? There's a question that asks if the new trucks will be bought or outsourced. Okay, then we have any planned expansions by Sfiso. Tell to that one. Yeah. Okay.
Obviously, with our location, with the Stugotus train station just next to us, I mean, it's virtually within a kilometer of our facility. We have been engaging with railways on this, and it seems to be a low-hanging fruit to try and export some product from there as well, to utilize rail. We've not been successful yet, but you know, we've seen some exciting things happening with Eswatini Rail. So we're really confident that something will come from that that will give us a good opportunity for expansion in that market as well. Any other questions?
Board. In terms of board representation, what provision has been made?
Okay, so there's a question on what provision has been made for board representation. So obviously, with the new investors coming, it is our intention to make 2 additional seats available on the board for new members as nominated by the new shareholders that come in. We, as mentioned earlier, Dan Simalani chairs the board selection and evaluation committee. And they will go in a public process. Well, not a public process. They will approach all the new shareholders for proposals. Once the shares are listed, the new shareholders will be contacted directly to nominate potential candidates for the board, whom they will then they have a process, the committee that they follow, and they will then evaluate, interview, and make recommendations to the board for appointment of 2 additional board members to the board. I hope that helps.
Thank you. There's a question from Keliwe that say, I see a lot of the capital that will be collected will be used to pay off debt. What strategies are in place that will eliminate this debt position in the future?
Okay, so yeah, that's true. The important part of reinvesting this money as capital, it's to remove the gearing from the balance sheet. And that's exactly why we've gone for a bond listing. The challenge that you have, especially in difficult times, of political unrest or COVID or things like that, it makes everybody nervous in the market, especially if the market's under duress, which makes it extremely difficult for the commercial banks to actually support businesses during difficult times like that, because it's uncertain and it makes the cost of debt really high. So the way the debt will be structured going forward, we will settle all commercial short and medium term debt. All interest-bearing debt will be settled, and we will have zero debt after this transaction. Then the bond program that were mentioned earlier as well, we will we are in the process of listing a bond program on the stock exchange as well for 250 million eMlangeni, of which we are trying to raise 80,400,000 in the first 12 months to utilize as part of this expansion program. And the balance sheet that you were shown earlier actually, or the income statement, allowed then for that, for the interest cost of that debt. But the advantage of a bond that you list over 10 years is that you can predict and be certain of how your debt will work. You know when you'll have to pay interest and how much you will pay. You know when you've got to repay this thing and by when. It's not something that gets re-evaluated every 12 months, or if one of your trucks have an accident and somebody from the bank gets upset with you, tomorrow they phone you and say, hey, we're worried about your facility. So it takes uncertainty out of the equation. We have structured debt, a 10-year bond program, and we've allowed in all the budgets to be able to afford that debt, and it will take our gearing ratio to, I think, 45% at the end of year 1, which is low, and in year 4, I think it is at 42 or 43%. So that's the plan with debt, to make it predictable, that you can know what's coming down the pike and that you can be prepared. Obviously, we've been conservative in all these numbers, so the amount of debt that we are raising is more than enough than we need, and it is also, there's a buffer for eventualities and unforeseen circumstances. But I must add this, as part of the approval that we've received from the Eswatini Stock Exchange Market Committee, one of their requirements was that we would, in all our reporting that we have to do to the stock exchange every 6 months, we have to report on how we used the funds that we raised, and we have to prove that we've actually used it for what we said we will use it. So I hope that provides some comfort. Are there any more questions?
Thank you, Mr. Franz. Someone is asking, in the event not all the 50 million shares are bought, will they be available again in the market? So that one will be, yes, it's true. They will be available in the market post IPO. But the difference now is you will be trading through the stock exchange. So it means you will be trading through brokers, which means there will be a brokerage fee. So subscribing now has the advantage of the fact that you will not be paying brokerage fees. And you also pay the market price. In case if it decides to shoot up, then you will pay a higher price. So yeah, if there are questions that we might have missed. Okay, I notice some of the questions have been answered on the chat. Thank you so much, Vusi. So if there is a question that has not been attended to, minimum amount has been answered, okay. So out of the 50 million shares, you can subscribe up to the 50 million, but the share price is 1 rand, 1 lilangeni, sorry. Then the minimum subscription is 1,000. Okay, someone is asking, I might have missed this, but my question is more on the onboarding process. It appeared to me there is no vetting process for people interested in buying shares. From what I think I understand, you just pay without any form of validation. Is this correct? Hey, you might have been sourcing from the wrong source. But anyways, now that you're here, yes, there is KYC. The market is very cautious about who is able to purchase the shares. So there is KYC and there is documents that have to be submitted. We'll get onto that right now with regards to the steps to invest. Can the presentation be shared if someone has missed something? Yes, but also the information that is communicated here mostly is on the prospectus that has been shared. But upon request, we can give you the presentation. Yes. Let's see. How many percent is the 1,000? I'm not too sure. That one can be calculated. Okay. Now let's move to the, is there another question? Okay, thank you.
Thank you. There's a question, what are your profit margins looking like and how have they grown over the years? I mentioned that in 2019, we implemented a turnaround strategy. So prior to 2019, we were not profitable, or we were not profitable. From F20, we saw the profitability. While we were still not profitable, there's a slide I shared, but it decreased. F21 and F22, we saw an increase in our GP and our profitability because of the turnaround strategy. So we have seen an increase. I can share the numbers with you after, and we can share the financials with you. Ndando can share those with you after, that you can see the trend. But there has been an improvement. Our GP increased from an average of about 30% to about 39 to 40%. That was our GP, and our profitability moved to, I think, 8% by F22. But I can share that with you after this. Thanks.
Okay, thank you so much. So right now we'll move to the next segment of probably the last. Okay, there's another question. Kolile, please get ready on the background.
Maybe I can just try and clarify on the dividend policy. So 10% return, by that I mean you will pay 1 Lalangeni per share, which means you will get a 10 cents dividend on that share. So a share will cost you 1 Lalangeni and you'll get 10%, so you'll get 10 cents out of that. If you bought 1,000 Lalangenis worth of shares, you will get 100 Malangeni dividend. That's what 10%, what the 10% translate to. I hope I explain it better now.
Thank you. Yes, I can see you can raise hands now. Let me take Philile Ndladla. Indile.
So my question has already been answered. Thank you.
Thanks, Pindile. Thanks for that. Back to you, Ndando. The question was answered, so that's what Pindile said.
Thank you, Vusi. All right, yes. I see Kolile has not presented anything. Can you kindly confirm? Okay, so right now what's going to happen is Kolile is going to take us through the steps of what you need to do from now when you want to invest. Yes, over to you, Kolile.
Good evening, all. May I please confirm if you can hear me?
Yes, we can.
Oh, okay.
Yes, you
Thank
can.
you. Okay, my name is Xolile Masugu. I will be taking you through a step-by-step guide on subscribing for Ngonyeni initial public offer. So basically, we've got like 4 steps. Okay. The first step that is required is for an investor to have a bank account with any of the 5 banks within Eswatini. That is your Eswatini Bank, Standard Bank, Building Society, Nedbank, and FNB. The second step is for the investor to submit your KYC documents and the completed subscription or application form to SNB Grant Thornton. So the KYC documents that are required for individuals who will need your proof of residential address. That could be your utility bills or electricity or water bill. In case those bills they don't bear your name, you can use your lease agreement if a tenant or an affidavit can also be used. Another document that is required if you're an individual is the copy of your ID. It should be certified and copied from both sides. And also share your proof of source of income. This could be in the form of a confirmation of employment letter or a payslip if you are employed. If you are not employed, an affidavit should suffice for the purposes of this IPO. Then if it's a company, we will need Form C and Form J, bank account statement or bank account confirmation letter, proof of physical address of the company, and the certificate of incorporation. And in the case whereby it's a trust, you will need your trust deed number, your trust account number, details of trustees and their KYC documents. That will be all on the KYC documents that are required. Then after having done that, you will have to complete the subscription form. So the subscription form is available on NPC website as well as on the emails that have been sent to you. So after completing the subscription form, then you send through together with your KYC documents. Please also note that the minimum investment is 1,000 emalangeni and each share is selling at 1 lilangeni each. So when you're making the payments should be done through an EFT. The payments, in terms of the reference, the payments should be made into NPC trust account. The details are also given on the subscription form. And also, the reference you should use for a natural person, it should be your ID number. If it's a company, it's a company registration number. And if it's a trust, you use your trust fund. Then you send the proof of payment together with your application form to transfer secretaries at transfersecretary@sng.gt.com. Then the fourth step would be the allotment. This will be done by the transfer secretaries, who will then notify Eswatini Stock Exchange as well as the potential investors. This will only be done after the closing date of offer for subscription, which will be on the 12th of October 2023 at 12 noon, which is tomorrow at 12 noon. And then thank you. And then the results of allotment shall be done on the 16th of October 2023. That is when we are going to share if your subscription has been successful or not. That will be the end of my presentation. Thank you. I may take any questions.
Thank you so much, Xoli. With regards to the dates she has just mentioned, kindly note that this date will not be applicable if the deadline the extension is granted. Yes. So now there were additional questions. How long shares are to be owned? So shares do not expire. They just it's ownership in a company. So as long as the company exists, you will always have your shares. Then does government have a stake? Not yet, but they are welcome to subscribe. Everyone is welcome to subscribe. I see a question with regards to the question that speaks about international investors. KYC for international investors, you can just, Kolile, can you stop sharing? So it's just the same with regards to everyone. And please communicate. We will advise self and Kolile. So what if you've made a payment and not reference using your ID? No problem. As long as you have attached and we have received it, we will document it. But we kindly advise that you use your ID so that it has some uniformity and also it's processed quicker. The closing date tomorrow, are you still to get approval? Yes, immediately when we get approval, we will communicate the new dates. What could make an application unsuccessful? That would be incomplete KYC documents. Yeah. What will happen if my application is not okay? Let me just say the application unsuccessful. Once we've received the applications and we see that they are missing documents, we will communicate with you. So we're not just gonna cancel the application. We are going to engage you to get the information. Then what will happen if your application is not successful? A refund will have to be processed, but we hope we do not get there. Now, okay, is it possible to? Yes, it is possible to pay on the 20th of October if we will be granted the extension. I think I've covered all. And let me just verify. Okay. There's a question on the dividend. I'll hand over to Mr. Pina.
Thank you, Ntando. So I apologize, I'm not explaining this well. So if you invest 1,000 emalangeni in year 3, year 4, and year 5, it is the intention to pay a 10% return on the money that you invested. In other words, if you invested 1,000 emalangeni, you will get 100 emalangeni as a dividend. But it's important to understand it is in that year that you get the money. And you get that in years after that, you will also get dividends. But that's not the only return that you get on your investment. If you buy the shares today for 1 lilangeni a share, and the price goes up to 2, 3, 4, or 5, or whatever number in the market, then your asset has become more valuable. So when you sell that share, you get a significant return. So typically, in investing in shares on the stock exchange, the bulk of your return, the significant return, is capital returns when you sell the shares. It's not typically the return that you get through your dividend. It's different to when you invest money with a bank. With a bank, your money stays the same, and with inflation, it actually gets worth less and less and less and less. With buying shares, what you pay for it today, the share price goes up as the company grows and becomes more valuable, and more people want the shares. But obviously, we want a cash return as well, and we don't want to sell all the shares. That's why we pay a dividend as well. The money that's not paid out as dividends gets reinvested in the company for the company to grow and become more valuable, so that your shares, which you pay 1 lilangeni for today, can be 2 emalangeni a few months later, and 10 years from now, maybe it's 50. So the real return that you get is in the capital growth of the shares. So typically what people do is they would buy a large quantity of shares, and then a few years down the line, sell some of them to recover some of their investment. And that's how you generate a return. The dividend, what we're currently talking about, if you invest 1,000 emalangeni, and we pay a 10% dividend in year 3, then in year 3 you will get 100 Emalangeni return, which is a good cash return in any case. You're not going to get 10% from a commercial bank, but the real upside is as your share price grows, the value of your shares increase, and when you sell it, you can get a significant return on your investment. I hope I've explained a bit better now.
Thank you. Thank you. Properly explained. Thank you so much. I hope it's clear on your side as well. So our applications entirely at the discretion of NPC or processed first come, first served. With regards to that, as per the presentation that we just went through, there is a process that is followed. So once the applications are complete, Oli will have to add and assist if I miss anything. But anyways, once the share subscription deadline has arrived, what will happen is these shares will be allocated. So there are two possibilities that can come out of that. Out of the 50 million shares that have been made available, if all of them are bought, which is basically okay, if we receive more applications than the 50 million, that's an oversubscription. But if we receive less, that means they've been undersubscribed. So in an event whereby we receive less than 50 million application for shares, okay, then everyone will get the share they applied, the number of shares they applied for, right? But when it comes to an oversubscription, there is then what we call an allotment process that will be followed, where the shares will be allocated on pro rata basis. Yeah, I'm just going to say that for now. Part of it was also communicated on the newspapers. Okay, someone saying, can an Answazi buy the shares without a Swazi ID? Yes, it's possible. Then can one reinvest, stay with the dividends? Okay, with regards to that, once the shares starts to trade on the stock exchange, it means that if you want to reinvest, your dividends will be paid. Then if you want to reinvest, you will have to contact your stockbroker and try buy available shares through the stockbroker. So I think that's the easiest way to reinvest, because once the 50 million have been fully subscribed, then in the market, you'll have to wait for someone to sell their shares for you to get to buy or to reinvest if you have acquired dividends. So with regards to the issue of the banks, previously on the previous webinar, we had specified the banks to be used. So what happened is the system is being automated now. So only 3 of the banks were able to be granted license to be custodian. But now, what we had to change, because it was causing a lot of confusion on your end, we did not, we have decided that we are going to go ahead and sell the shares the old way. We will issue the certificate, then you can come later to dematerialize. Dematerializing basically means that now you do not have physical share certificates. So the shares are held by electronically, right? So with regards to that system, we are working with the system works with 3 banks that has been allowed the license. So once you have been allocated your shares and you receive your certificate, then you can come and dematerialize. That's when you will have to abide by those laws of the banks and stuff. So right now you can just subscribe using your normal account that you have. Then once the certificate has been issued and you want to dematerialize, then you'll have to use the banks that are prescribed. I hope that one answered. Okay, the shares. Okay, I think some of the questions have been answered here. Let's see. More shares. Yeah, I think most of the questions have been dealt with. So is it possible that after closing, I can acquire more shares in the long run? That will depend on availability in the market if someone is willing to sell, because once all these shares are sold, it means that they're in the hands of other investors. So if an investor is willing to sell, then the broker will play the role and you'll pay the market price and also you'll suffer the brokerage fees. Brokers currently are African Alliance and as ESW Securities. Yes. Okay. 10% dividend in 3 years. If everything goes as planned, is there a chance of getting a dividend of 10% at least per annum from year 4 going forward? Okay, that's actually what the plan is. So what was communicated was that the first 2 years, it's not dividend unless the company performs very well, then the could change. But after year 3, the plan is to have the 10% per annum going forward. So which are the bank we're talking about? The banks that are licensed currently to be able to assist on the ATS system working with the stock exchange are Nedbank, Eswatini Bank, and Standard Bank. Okay, licensed brokers, I think I've answered. Dividends are paid. Okay, so one other thing to note. Right now, if you are using FNB, it's fine. We can take your KYC and we can take your FNB account. But now, to receive the dividends, you will have to have the account with those banks, unless the other banks decides to join to get the license as well. Can you sell the shares in the long run? Yes, definitely. Once the market, actually, one of the purposes of listing on the stock exchange is liquidity on your shares. So once you want to sell your shares, you engage your broker, then they will facilitate the trade. That's what Mr. Pinar was explaining when he was saying that there are two kinds of returns in shares. It's your dividends and also the capital appreciation, where you sell the share in the prevailing market rate, which is possibly higher than the one you purchased with. So yes, you can sell. That's the whole purpose of the stock exchange. The current licensed custodian banks are not. Oh, that's an answer. Sorry. For the IPO, yes, you cannot. You don't have to go through the stockbrokers. Financial year end of the company is the 30th of June. Yes. All right. In terms of expansion plans in hardware, are there plans to open more outlets in the country? Let me give to Marisa.
Not in the short term, because as we said, a bulk of our clients are corporate clients and we can supply them. So how that model works is a bulk of the product that comes in, because we secure orders with these corporate clients, we bring the product in and sometimes it doesn't even come into the store. It gets GRV'd from our suppliers and it goes straight to our clients. So a bulk of that will still hold the bulk of our revenue. As much as we're planning to increase the revenue within the areas we are operating in, a bulk of our revenue comes from the corporate clients that we are supplying. We will review this should our revenue grow and there is opportunity to expand further. We will review that, but in the short term, it is not in our intention to do that.
Thank you so much, Marisa. So please, can you repeat the explanation about the FNB account? I did not understand the issue with regards to the payouts. Okay, like I had mentioned, if in the next 3 years, FNB is still not part of the custodian banks authorized, then you will have an issue with regards to the dividends. Hence, I'm saying I would advise you to, once you receive your share certificate, get your account ready and dematerialize the share certificate, because now we are going we are using the automated trading system. So it means that you should have, by the time dividends are declared, you should have an account that will be able to receive those dividends, because currently we are working with this, unless the system improves or FNB decides to join as well. So for this IPO subscription, you can do the transfer from any of the banks, definitely, yes. Okay, that's an answer. All right, thank you so much, everyone. And thank you for your engagement. So now brings us to the end of today's presentation, and further questions can be directed to me. And I will also send a follow-up email in case you do not have the document to subscribe for the shares. But most importantly, I would like to appreciate Ngonyeni for organizing this for us, the information session. And I would like to thank specifically the chairman who has brought us this great opportunity. And I appreciate the transparency, because to call people to ask you all kind of questions shows how much transparent you are. And looking at what you are presenting, it looks like you are transparent on everything, and you are also testing your strategies, because from what I heard, this strategy has been tested from 2019 on the turnaround strategy, and everything is done on conservative measures, which means that we expect the company to outperform what is on the documents. But anyways, my contacts, you will get my email immediately when I finish this session. So thank you so much. Have a good night.